Morning, everybody. Welcome back to the Opportunistic Trader. It's just after 11, and we're joined by Tony Greer of TG Macro. How's it going this morning, Tony?
What's up, Mike? Nice to be on the other side of the election, that's for sure. How about you?
Exactly. I think that's the key. Done with all the election, commercials, talk. Now we can move on with our lives. And, I think that's what, in a way, we're seeing with the markets. What are your thoughts here? It looks like what are your thoughts, I guess, election in terms of what sectors are in play here?
It looks like it was a good night for cannabis. We got some new state legalizations with the rulings last night, and I think the sector is really looking good. The big marquee names in the sector are trading great, even though they got a little bit ahead of themselves this morning. Names like Canopy and Cron and Hexo kind of ran out ahead of the elections. I guess expecting some pretty good results. So I think that the sector is going to get back on its feet. I'm very, very, very impressed with healthcare today. I mean, healthcare is a sector you got to watch now because that was the late breakout last year. And all this equity move did to healthcare was bounce it off the 200-day moving average. It immediately cleared the 100-day at 90, and it cleared the 50-day again at 92. And it's already, now it's heading toward the October high, the October sort of post sell-off high of 93.60. And through there, I mean, you make a tough case as a technician trying to be bearish healthcare. So that's, two sectors that look like they've got a lot of potential. And then you've got technology getting back on its feet today, with XLK back above the 200-day moving average. Excuse me, Q's back above the 200-day. So, you can definitely make a case as a bull that the risk reward is to be long here in the short term to see where this rally peters out. And that's kind of what I'm looking for. Still expecting a strong dollar. I'm still expecting higher yields. And I'm still expecting the higher vol regime to hold in the VIX. So I'm looking to buy some puts down here between 15 and 17 in the VIX, in those sectors that I'm looking to sell the bounces, like social media and emerging markets and maybe even builders if it gets juicy enough. But that's how I'm postured right now. I'm kind of put shopping on this rally with the S&P between moving averages.
Well, so let's a few questions here. So, why do you think the market is rallying today? Why is gridlock good? So, the Democrats control the House now, Republicans control the Senate, and it seems like it's going to be difficult to pass a whole lot in the next 2 years. So, why is that being seen as a 2% rally in the Nasdaq, S&P up over 1%, Russell's underperforming, but why is that seen as good in your opinion?
I think because Trump averted a disaster yesterday. I thought it was really interesting that, I mean, the results were not the blue wave that, the big media bureaucrats were looking
Right.
for. So Trump averted a disaster yesterday. And I feel like, with just having a big control of the Senate, that's going to let him put a couple more conservative Supreme Court justices in. So I just think that the market is celebrating a non-Trump disaster yesterday. It was pretty interesting. If you want to talk about presidents, we should talk about President Obama, who was out, the first president ever to stump against a successor. And he went 0 for 4, right? All 4 states that he stumped in yesterday lost the governorship. I think that was a direct vote on his efforts to sort of revive the Democratic Party. All 4 big states that voted against Kavanaugh were unseated. So I think that this is pretty much, I think it sets the tone for a pretty sticky, American landscape. But I don't think it was necessarily a bad day for Trump at all, just because we gave up seats in the House of Representatives.
Yeah. Well, so basically you're saying it's a disaster averted sort of
Yeah.
rally, and also let's move on with our lives after, all we've been talking about for the last 30 days of this election.
Yeah, a little bit. The S&P is pretty binary to me now. We're clearly, this is a retracement rally after call it a 350 point S&P washout in October. So I'm not expecting that washout to just end and be behind us and for the S&P to go marching on its way again. I'm really not. Like, I'm really concerned about it in between the moving average band here. And really all it's doing is retracing up to the resistance level from the trend line that it broke down through. So all of that sort of happens between 2,800 and 2,840. And that's kind of my kill zone. So I'm going to be sort of, investing in some puts up there and probably shorting some stocks, and looking for the markets to back off and, to just keep trading them. And conversely, when I see it dip back down to 2,600, I'll want to buy that again. But we're not at either price yet. So I'm kind of sitting on my hands today, and I'm really just looking to trade around the cannabis names. And I'm looking for some energy stocks to buy.
Well, you make an interesting point there, but because if you go back to a month and a half ago when we really started moving lower in the equity markets, the supposed stories were higher yields and U.S., China, and tariff and trade issues. And I see both of those. I'm looking at the 2 years at a new high for the year. The 10 years backed off a little bit. We're at 319 right now. The high was 325, but still, above the levels when we started to, supposedly panic. And the 2 years at the high. So yields are still front and center, and we have the Fed tomorrow. And then the second point is, Trump even made a tweet this morning. Okay, hey, this election's behind us. Let's get back to work on talking tough with China. So I don't see that issue going anywhere.
Exactly. That's a great point, man. I mean, that's exactly how I'm looking at it. Those are the things that toppled the rally. Those things have not gone away. And that's exactly why I'm doing what I'm doing, describing to you that I'm trying to buy some volatility on this dip. I'm trying to buy some puts. I'm trying to sell the rally in the names that are retracing right back up to the trend lines that they broke. And I'm going to see what happens after that. I will have respect for this rally if it goes ahead and settles above 2840 and this week in the S&P. That will be something that really blows me away if that happens. So, I'm still looking to posture by selling this rally because, as you said, nothing has changed about the underlying condition. And the S&P still is, working off a really, really overbought condition. So I still think that this rally should be faded.
Yeah. And then you were talking healthcare before. What are a few? Is there an ETF that you look at for healthcare, or just individual names?
Yeah, XLV is the good. XLV is basically the best sector ETF that I follow. It's 10% Johnson and Johnson, and then it's 7% UNH Pfizer and 5% Merck. So that covers big pharma right there, with about 30% of the ETF. And if you look at all those names, they're looking pretty good. And it just looks like something where healthcare is going to resume its rally. I don't know if the rest of the market goes with it, but this is a really, really impressive move off of the 200-day moving average support level to me in healthcare. So I'm just trying to respect that as I sort of get bearish the broader S&P into 2850. I just want to respect the things that can hurt me, like healthcare and pretty bullish cannabis still, and the technology space seems to be trying to come back a little bit. So that's all. I'm respecting the post-election moves and trying not to get myself hung on this rally, to be honest with you.
What about energy market? I know you've been supportive of certain names over a period of time. The energy's gone from the darling to a 20% drop in crude in a short period. What's your stance, and what do you think on the energy sector as a whole here?
Yeah, I'm cautiously bullish in crude oil. It's it's traded all the way back to a level that I consider another make or break level. So this is we've got a couple of things trading at the make or break level here. Crude oil has traded back to sort of the 2000. Let me just get the chart in front of me here. I'm sort of looking at crude oil to hold this level here. When I look back to 2015, there was a huge consolidation level around $60. And then we held that level and bounced when we tested it in March and rallied. And now we're going to come back to $60 again. So I'm looking for that area to hold. It's also a little bit of an ascending trend line. The energy stocks all got a big juice out of the natural gas move in the last couple of days. Also, Oxy just came out with a pretty good earnings report, and so that stock got a couple of upgrades, et cetera, et cetera. And that's also one of my favorite names in the space. So, I'm looking to trade Oxy from the long side again. I'm looking to trade ConocoPhillips from the long side again. Conoco really only pulled back to its 200-day moving average support level, and it is so far, consolidating and holding and making higher lows. So I just think it's an opportunity. I'm trying to play the buy side a little bit safer on the rally. On this retracement rally, and pick the names that I think will hold in there if the broader S&P comes off. And I still, no matter what, I still lean toward, the energy names, the cannabis sector, and I'm still, got an eye on healthcare, even though I'm not trading it at all. I have to have respect for the rally.
Yeah, absolutely. All right. Hey, Tony, I really appreciate a lot of great information, a lot of great thoughts here. I think everybody's happy the election's behind us and we all can get on with our lives in the markets. So that's
Yeah.
good.
Good stuff, Mike. Thanks for having me, man. I appreciate it.
All right. That's Tony Greer of TG Macro. You can check out his information, tgmacro.com. A lot of great stuff. Thanks, Tony. Talk to you later.
Thank you.